15 reasons having business credit is a must for every successful company, and how not having it will cost you. Business credit is credit in a business name linked to the business's employment identification number. This is credit for a business. It's not linked to the owner personally. It's also not linked to their personal Social Security number. Using business credit, a business owner can get vendor credit cards, high-limit accounts with most major retailers, fleet credit, and cash credit, including Visa and MasterCard. Get approved for business credit accounts regardless of personal credit quality. When you build business credit the right way, there is no Social Security number supplied on the application. With no SSN supplied, there is no personal credit pool. Because of this, a business owner can get high-limit business credit accounts. This is regardless of personal credit, no matter how bad it may be. Personal credit quality does not matter. Reason number 1. Business credit doesn't affect personal credit. Business credit reports to business CRAs, not consumer CRAs. As business credit is used, it has no adverse impact on the owner's consumer credit. This is because it's not reported to consumer agencies. It means utilizing the account, even over 30%, won't have any adverse impact on personal credit scores, and there are no inquiries on the personal credit when applying for business credit, as long as a business owner doesn't supply a Social Security number. 10% of a total consumer credit score is based on inquiries. So if a business owner is using personal credit to apply for business loans and credit, then their scores will go down as a result of those inquiries. Personal credit inquiries can stay on credit reports for an extended period of time. This affects the ability to borrow more money. Some unsecured business lending sources won't even lend money if there are 2 inquiries or more on personal credit reports within 6 months. Reason number 2. Save your personal credit utilization rate. Save personal credit for personal expenses. Using personal cards to pay business expenses will harm utilization rate. Utilization rate equals the amount of credit used divided by the total available credit. Keep this percentage at 30% or less. Handling business expenses with personal credit can make this nearly impossible. 30% of total consumer credit score is based on utilization. So by using personal credit to get credit cards for a business, using those cards will lower personal credit scores. Using more than 30% of the limit will result in a score decrease. So if the limit is $1,000, a balance above $300 lowers scores. This means 40% of the total score is damaged just by applying and using the credit obtained using consumer scores. With true business credit, 0% of a consumer credit score is affected. Personal credit scores are based on 5 factors. Payment history counts for 35%. Utilization counts for 30%, length of credit history counts for 15%, accumulation of new credit counts for 10%, and credit mix counts for 10%. Reason number 3. Good business credit scores can be built quickly. Business credit scores are mainly based only on if a business pays its bill on time. The D&B PAYDEX score is the most widely used business credit score. It's solely based on payment history. The Equifax Small Business Risk Score is also based solely on payment history. The Experian Intellis score is primarily based on payment history, and about 65% of the score is based on how people pay. D&B's PAYDEX score is based on payment history. A 100 means a creditor can expect a payment may come early. An 80 means payment is prompt. A 70 means payment comes 14 days beyond terms. A 60 means payment comes 21 days beyond terms. A 50 means payment comes 30 days beyond terms. A 40 means payment comes 60 days beyond terms. A 30 means payment comes 90 days beyond terms. And a 20 means payment comes 120 days beyond terms. Consumer credit scores are made up of 5 factors. As a result, it takes years of well-disciplined borrowing to get really good scores, but business credit scores can be built much faster. This is because all that's needed is to have accounts reported with good payment histories. Reason number 4. Anyone can see business credit reports. With consumer credit, someone has to have the consumer's permission to pull credit scores. This is required under the Fair Credit Reporting Act. It requires that someone have a permissible purpose to pull personal credit. If someone pulls personal credit without permission, they can pay a $1,000 fine or more. With consumer credit, only certain organizations can even access credit reports: banks, auto dealers, mortgage brokers, and others licensed to lend money. With business credit, this information is made public. This means anyone who wants business credit reports can easily and cheaply get them. Reason number 5. Business credit reports are public. Here are some of the people who can see business credit reports as they wish whenever they want: prospects, customers, suppliers, others you might do business with, competitors, and anyone else who wants it. Here is some of the information they can easily see about a business: amount of trade lines, past payment performance, credit scores, high credit limits, employees, revenue, and much more is available to anyone who wants it. All that's needed to pull an established credit report is the business name. If a company isn't well established, a business address is needed. With only a business name and address and with no need for permission, anyone can pull business credit reports. Keep monitoring reports regularly to see what others can see about you. Keep building your business credit. That way, you can have a credible image portrayed for anyone who wants to see your credit in the future, especially those who lend money or issue credit. Reason number 6. There is no personal liability and no personal guarantee. When a Social Security number goes on a credit application, it almost always means the applicant is providing a personal guarantee. This means they are personally liable for the business's debts. If they were to default on one of those obligations, then the creditor will pursue business assets first. Then the creditor will come after personal assets. These include home, cars, stocks and bonds, bank accounts, and any and all other assets. Reason number 7. Business credit protects personal assets if a business fails. Business owners don't expect to fail, but unfortunately, 90% do. It makes no sense to put a financial future in jeopardy when going in, there is a 90% possibility of ruining it. Many times, the reasons a business might fail have nothing to do with management. It can come from things that can't be controlled, such as shifts in the economy. Personal guarantees are risky. Without a doubt, starting and running a business is risky. This is why most conventional banks make it so hard to get a loan. So don't use a personal guarantee unless absolutely necessary. With many business loans, you must, but with credit, it's unnecessary as long as you build business credit. Reason number 8. Business credit increases the value of a business. Consider two businesses that have been in business for 5 years and are the same in every way except Company A has no business credit profile and score and is being recommended for no credit. But on the other hand, Company B has 10 trade lines reporting, an excellent business credit profile and score, $52,000 in available credit to help with growth, and is being recommended for $42,000 in credit from the business reporting agencies. Anyone who has sold or bought a business knows the importance of business credit. Knowing how easy extensive credit and financial information is to get for a company, if you were a buyer, wouldn't you get it? Would you want to buy this company from what you see on the business report? Is the company established? Do they pay their bills? Do they look like a successful company? Reason number 9. Business credit quality determines loan approval and terms. There is no Fair Credit Reporting Act in the business world. There's no requirement that those who review business credit provide a notification that they did. They don't have to let on that it was used in their lending decision. So even though it's always reviewed, most business owners have no idea that it is. And even high-risk merchant cash advance loan decisions are partially based on business credit quality. It's impossible to get an SBA loan without having established business credit. Reason number 10. Business credit doubles borrowing ability. Another benefit of business credit is that it more than doubles borrowing ability. You already have consumer credit. Now you can have a whole other credit profile with business credit also. Having business credit is the only way to have 2 credit profiles. You can't go into Staples and get a consumer credit card, then go in the next day and get another one. This is possible with business credit though. You can go into Staples and get a consumer credit card, then go in the next day and get a business credit card with them. Business credit is the only way to double the amount of credit you have access to. This is because you have 2 credit reports. With access to more store and cash credit cards, you also have access to a lot more usable money. Reason number 11. Business credit has very high credit limits. Per the SBA, business credit limits are 10 to 100 times that of consumer limits. So not only can you get business credit fast, it's also credit with very high limits. Businesses have a greater need for credit than a consumer does. This is called credit capacity, but you can easily need this much or more for a business. Getting business credit radically increases available credit. An average Staples card limit on the consumer side might be $3,000, but in the business world, it might be closer to $30,000. It's very common to get credit cards with limits of $10,000 or more within 2 to 3 months from starting to apply for credit. This is impossible to accomplish with consumer credit. Reason number 12. Business credit building is fast. Business credit can be obtained very quickly. Get approved for initial vendor credit to help your business grow immediately. That credit will typically report within 30 to 90 days. It will trigger Experian and Equifax scores and PAYDEX. Once reported, you will then have reported trade lines. These in turn give you an established business credit profile and score. Once your profile is established in 90 days or less, you can then start getting real usable revolving store credit cards. Within 120 to 180 days, you can then get real cash credit. These are cards such as Visa, MasterCard, Discover, and American Express credit you can use anywhere. Reason number 13. Startups can get business credit. Business credit is perfect for startups. Most conventional and private lenders won't lend to companies without financials and who have been open for 3 years or less. The most popular cash flow type of financing requires 1 year in business and steady revenue. Most consumer credit card approvals are based on personal income. But with business credit, even a startup can get loads of new credit without any of these items. Get business credit with no financials. Business credit is perfect for businesses that don't have or want to show financials. Because we write off all expenses in a business we can. This leaves a smaller net profit, which is what most lenders and investors look at most. Business credit doesn't look at financials or bank statements. A business even with no cash flow can be approved for high-limit cards, helping them grow their cash flow. Tax returns aren't looked at either, so even if the business shows a loss, they can still be approved. Get business credit with no collateral. Most business lending requires collateral. This is because most businesses fail, and the risk of repayment of lent money is very high. This is why most conventional lenders make it so hard to get money. They aren't set up for this type of risk. This is also why SBA requires all business assets and even personal assets be used as collateral. Business credit is one of the only ways to get money without providing collateral to offset the risk. Reason number 14. Knowledge of business credit provides a huge competitive advantage. 90% of the general population knows nothing about business credit. Now that you do, you have a huge competitive advantage. It's much easier to grow a business with access to credit. You can test advertising easier and even make mistakes without risking it all. When you have access to capital, you have a big advantage over competitors who don't. Reason number 15. Business credit is the best way to get the capital to fuel a business. The truth is, most businesses fail. And according to SBA, the 2 biggest reasons for failure are lack of access to capital and management mistakes. When you have more money, you can afford to make more mistakes. Having access to capital helps save you from both of the main reasons most businesses fail. Business credit is a path to success in the real world. Every highly successful company in this country has business credit. Many of these companies used their business credit to get as big as they are today. And business credit is not only for big companies. Any company can build business credit. Big companies are typically the ones who benefit from business credit the most. They have CFOs who know how to get and use business credit. Most small businesses don't, but you can get your hands on the exact same credit these larger companies have if you know the formula to obtain it. Bonus reason number 16. Establish a business credit history before it's needed. Establish a credit history before it's really needed. Credit history is one of the components of calculating your business credit score. The longer and better your credit history, the better a business's credit score will be. When you consider what credit score is needed for a business loan, then you need every bit of your credit score you can get. If you start early, it can only help you. Bonus reason number 17. Keep business credit for unprofitable times. Prepare for lean times. If you are in a seasonal business, this is a part of the DNA of your company. But every business can go through leaner times. If you have to make payroll or equipment payments or cover rent, you will need business credit to get by. By establishing business credit before you actually need it, you are far more likely to get better terms or even credit at all. Bonus reason number 18. Business credit means trade credit. Trade credit can really help you. You should use it. Work directly to establish a relationship and get credit floated to you for the things you need all the time. Plus, true starter vendors report to at least one of the CRAs. Bonus reason number 19. Business credit can lead to bank loans. Business credit means you can eventually get bank loans. If a business opportunity is just too good to pass up, you often need to act quickly, but you may not have that kind of cash on hand. Establishing business credit means bank loans will be granted more quickly and with better terms. Bonus reason number 20. Business credit payment history matters. Your payment history matters. Always. It affects a business credit score more profoundly than pretty much anything else. Pay your bills on time, in full, and you'll have good business credit. Establishing business credit early means you'll have that many more times and opportunities to establish a good payment history as well. Let's recap. There are a lot of reasons business credit can help any business. It's independent of personal credit, so using it doesn't affect utilization rate. It can be built quickly. Since anyone can see business credit reports, building business credit bolsters your reputation with suppliers, customers, and even competitors. Business credit protects your personal assets and doesn't require personal guarantees. Business credit increases the value of a business, and it determines loan approval and quality. It effectively doubles your borrowing ability and has very high limits. Even startups can get it with no financials or collateral. It is a huge competitive advantage and is the best way to fund a business. Big established companies use it. Why shouldn't you? Build business credit before you really need it, and it can only help you. Contact us today to learn more about 15 reasons having business credit is a must for every successful company and how not having it will cost you.